I want to show you the other hand. It is really important when there's a big crisis, usually government-created crisis. You have to look to the other hand. What is the other hand doing? Well, I just want to look at the banking sector and your dollar, the economy. We told you before COVID started, about 6 months before, that there was going to be a major impact on the banking sector because of what was happening with their emergency repo loan program. Now, the Fed, what they do at night is the banks have to account and have enough cash in to cover all their holdings in case something happens overnight. And so when there's trouble in the banks, they go, it used to be called the discount window. It was the window of shame. And you would go there and it was public knowledge among the banks. So you could tell which bank was underwater, whose bank is in trouble. Did you hear they went to the discount window? They had to borrow money. That way, it kept banks responsible. In 2008, I think they called it to the emergency repo loan window. They got rid of the discount window first. I think they just made it secret so nobody would know. So it took away all the shame. Now they have a $500 billion loan program, and the banks can go and borrow as much as $500 billion, $500 billion at night. And then they have to repay it over, it used to be the next morning, but now it's up to, I think, 30 days, maybe 60 days. And it wasn't enough. That's what was happening before COVID hit. And then COVID hit. And then everybody got a big bailout. Wasn't that great? The banks are just awash with cash now. Big bailout. Well, not enough, apparently. The Federal Reserve has transformed its $500 billion emergency repo loan program into a $500 billion standing repo loan. Now, this came out in a press release that we were watching because we're watching the other hand. Press release Friday at 4 p.m. Well, everybody's around looking at the news on Friday, the Friday before a 3-day weekend, right? It's stunning news, given the fact that inflation is soaring at levels we haven't seen since the Carter era, and we're still in the middle of this pandemic, trillions of government of emergency spending still sloshing through the economy. But as far as the Fed is concerned, the emergency phase of their daily $500 billion of lending to the banking administration is over, and we're now in the new normal where you can get that $500 billion every day, and the Fed will pump it into the economy. Now, I know what you're thinking. What if $500 billion isn't enough? Don't worry, the Fed chairman, Jerome Powell, granted himself authority to increase or decrease that amount at his discretion. Next, the New York Federal Reserve decided it was going to stop publishing the Fed Now GDP numbers for the U.S. economy. I know what you're thinking. Isn't that kind of important? Sure. But they're saying it's getting so complex because of the new variables in their model because of COVID-19. They just can't keep up with it. They're tired. And they just can't keep up with that GDP number. Now, this is significant because this is the longest running official GDP number that the Fed publishes. Second reason, hundreds of underlying financial systems and models in the U.S. rely on that GDP number for their own subsequent modeling. So, it's academic research, blah, 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 blah. Let me just break it down to this. This affects you because the Fed Now GDP number is used for cost of living adjustments. So your pension, retirement accounts, annuities, all of that follow that number. No word when the Fed can get the Fed Now GDP number its third shot. I think Fauci said it's maybe three. We wish it well. The largest investment brokerage firm in China this weekend. There's kind of some news there you should be paying attention to. It's called Evergrande. It has deep ties to the Communist Chinese Party. All of it does. Everything is basically a front for the Chinese. They alerted that they may get payments and payment bonds due, and that's concerns for the long-term corporate viability of this investment brokerage firm. So it is described as the Lehman Brothers of China. If this thing goes down, it holds $350 billion in debt, about half of which is in U.S. dollar debt. Financial analysts around the world have noted a collapse of Evergrande could be as huge and as devastating to the Chinese economy as Lehman Brothers was to the U.S. economy in 2008. It would start, I'm quoting, a cascade of bank, pension, and corporate failures throughout the Chinese economy. Just last week, there was a bank run at the banks connected to or invested in Evergrande, but the Chinese Communist Party stepped in by limiting withdrawals and providing liquidity. And if that doesn't stop there, they'll just shoot people. So this is exciting because if you haven't gotten something, I ordered a stove a year ago. It was supposed to come in. It was supposed to come in at the beginning of summer. Then it was the end of summer. Now they say no estimate. Could be another year. You don't want China to fall apart just because of the trade barriers for most things. Mine wasn't coming out of China, but parts were coming from Europe. And can't get them. If China goes down, not. What do you say, Stu? Suboptimal.
Suboptimal. Yeah, that would be suboptimal.
Americans are now paying the highest price for gasoline in history for any Labor Day weekend. And this past week, Saudi Arabia, whom Joe Biden recently called on to increase production. Of course, let's remind ourselves that Joe Biden's policies were enacted, blocking all new oil and gas leases on federal on land, which has resulted in a net decline of over 25% for U.S. shale oil, nearly 10% reduction in natural gas production, and higher prices all around. Well, anyway, Saudi Arabia announced last week, because we're paying the highest price on any Labor Day weekend in history. And they're our friends, and Joe Biden is working hard for us. There's a 10% cut in prices per barrel, and only for a few select markets.
My wife, Lisa Page, has been allegedly accused of putting these stickers up on gas pumps.
Blame Biden? Oh, I love
Blame
that.
Biden and a picture of Biden saying, "I did that." And they seem to be pointing to the gas price.
Oh, I love that.
And look, some photos might indicate
that she's done that.
She's done that, but I think she just happens to be filling up at gas pumps and taking pictures of that occurring.
I would hope so. That would be wrong. Mm-hmm. Anyway, the Saudi Arabia said 10% cut in prices per barrel for select markets. Remember, Joe Biden went over and said, "Hey, can you help us out? This is too much." And they said, no, we're not one of the select markets. They're going to be discounting for China and India. So
great.
That's good. Good for them.
It's working out well.
And the Wall Street Journal reported this week, JP Morgan Chase, remember the one that doesn't want any of the Flynn family involved, won't carry their credit cards because they're disreputable. The Wall Street Journal has reported this week that J.P. Morgan, the largest bank in the U.S., is engaging in trading its own shares of stock in what is known as dark pools. Now, what could go wrong? I don't even know what dark pools are, but it sounds great, right? Economists refer to dark pools as stock trades that don't happen on public exchanges like the NASDAQ or New York Stock Exchange, but rather happen offline. Dark pool trading is not technically illegal. It's generally only practiced by pure investment banks or brokerages. It's unheard of that an FDIC-insured Federal Reserve and U.S. government-backed too-big-to-fail bank is engaging in any kind of dark pool trading. The reason why this is worth noting, let's go back to 2008. Do you remember the derivative trading, in the mortgage bond market and how it crashed the global economy? Is that dark pool trading that's not monitored or regulated by the SEC? Remember? So now we have the largest bank in the U.S., one that has been convicted of 5 felonies. J.P. Morgan Chase convicted of 5 felonies since 2012. They have paid billions of dollars in fines to the SEC and the DOJ. They're actively engaged in trading hundreds of billions of dollars worth of shares in offline markets not being monitored by the federal government. Now that puts that bank at huge risk. But remember, that bank is 100% backed by your tax dollars. So don't worry. You can bail them out at any time. Watch the other hand. Something very bad is happening with the banks and the way we are now all starting to do business at that level. When you're not aware of these things, when you're not included in these things, you're the one that ends up getting screwed.